Hello Accounting 101 students. In this video, we are going to go over how to prepare the statement of cash flows using the indirect method with our Chapter 12 end of practice question number 6. And in this problem, we're given a lot of data. To prepare the statement of cash flows, your three main sources of information includes the comparative balance sheets, the income statement data, and additional information. And you're going to be preparing the statement of cash flows in this problem using the indirect method for the year ended December 31st, 2017. And the statement of cash flows starts off with the cash flows from operating activities. And when we use the indirect method, we start off with net income, because most of our operating activities involved revenue, which has been collected in cash, and also it includes expenses that have been paid for in cash. So most of our operating activities will be reflected in our net income. However, we may need to make some adjustments to reconcile the net income to the net cash provided by operating activities. And at the end of this section, our main goal is to get the net cash provided by operating activities, hoping that this number is positive, which correlates to the word provided. If the number is negative, then you would use net cash used by operating activities. So in this process, you start off with net income. You think about what things do not impact cash. You also look at what timing differences there are between when your sale was made and cash was collected, or when an expense was incurred and it was paid for. So we want to look at the changes in our current assets and our current liabilities using the balance sheet. So we're going to go ahead and get started with our net income, which I'm going to pull from this income statement. Then I'm going to think about what items in the income statement do not have a cash impact. So most of these sales should be collected. Most of this cost of goods sold should be paid for. Most of our operating expenses should be paid for. But then we have our depreciation expense. And we recall that depreciation is a non-cash journal entry. We debit depreciation expense and credit accumulated depreciation. So our depreciation expense is a reconciling item, and we need to add back that item to get to the net cash provided by operating activities, because that depreciation expense reduced our net income. Then we have the loss on the disposal of fixed assets, because the other items, the income tax and the interest, should be paid for. So the loss on disposal also is going to be a reconciling item. And the reason for that is that the sale of the plant asset will be included in the investing activities section. So the actual sale will be included in the investing activities section. So we want to take away the impact from net income in our operating activities section. Next, we're going to be looking at our changes in our current assets and our current liabilities. So I'm going to pause this video for a second and include the math. Basically, you're going to take the difference between this 2017 number and the 2016 number to compute the difference, the dollar. All right, so now you can see that I included the math. Basically, you just take whatever number you have for 2017 minus the 2016 number, and we notice that our cash increased, accounts receivable increased, our inventory increased, and our prepaids increased. And that just happens to be the case for this problem. Sometimes you'll have some of these increasing and some of these decreasing. We also have accounts payables increasing and accruals decreasing. So one of the things that you want to notice is I did not include for operating activities the property, plant, and equipment because that will be considered for the investing activities. Also, the bond payable will be considered for the financing as well as the common stock, and retained earnings is impacted by our net income, which is already considered, and dividends, which will be considered in the financing activities section. So I'm going to move these notes over to the side. So that way, when we go through our statement of cash flows, we can remember what items increase and decrease and by how much. All right. So here we are with our operating activities section, and we notice that our cash increased by $37,260. So later on, when we get to the cash portion, that's when we will consider cash. But for the operating activities, we'll start off with the increase in accounts receivable. So you want to carefully select each of these items. So our accounts receivable increased by $57,270. So that means that we have made sales, but we have not collected the cash yet. So this will be a minus. Then we notice that there is an increase in inventory. That means that we've sold some inventory, but we've also spent additional cash replenishing that inventory. So that would be a cash outflow. So we're going to subtract that. We also notice that our prepaids increase. So that means that we paid cash in advance for assets more than the prior year. So we're going to go ahead and include that amount as a decrease in cash flows. And then we're going to be looking at our liabilities. Our accounts payable increased, so that means that we have more expenses that were incurred but that have not been paid for yet. So that means we're still holding on to the cash, so we're going to include that as a positive number that we're going to add. And then we look at our decrease in our accrued payables. So if anything in your current liabilities goes down, that means that you've paid for it. So you want to kind of notice that there's a bit of a trend here for our current assets. When they increase, you're going to subtract it. Okay, so when our current assets increase, we're going to subtract it. If your current assets decrease, then you would add that amount to this section. And the opposite will hold true for your liabilities. For your liabilities, if they increase, that means you haven't paid that liability yet, so you'll add it. If they decrease, that means that you've paid for it, so that will reduce your cash flow, so you'll subtract that. So take some time to add and subtract these numbers, and once you do that, you will realize that the number that we have from these reconciling items is $25,703. And then the net cash provided by operating activities will take the net income and add these reconciling items, and we have a positive cash flow of $203,469 provided by our operating activities. Our next section is our investing activities, and for the investing activities, we look at our long-term assets. So we see that our long-term investments have increased. We notice that our plant assets have increased, and our accumulated depreciation went down a bit, right? So I'm going to wonder why it went down. So this is where we look at the additional information. So the additional information tells us that new plant assets were purchased during the year. So for the new plant assets that were purchased during the year, this is going to be an outflow of $115,000. So I'm going to include this as an outflow purchase of plant assets, and this will be a negative sign. So it's going to be minus 115 because that was the purchase. Then I'm going to be looking at my additional information. Old plant assets having an original cost of $66,125 and accumulated depreciation, so these were almost fully depreciation, they sold for a little bit of cash. So that means that we collected cash, we had an inflow of cash from the sale of a plant asset. Then I notice that there is a bond payable that will deal with financing and a cash dividend. Okay. So going back to this section above, the purchase and the sale deals with the plant assets and the accumulated depreciation. Now I need to compute the dollar change in the long-term investments because the increase was all due to purchases. There were no sales mentioned. So the purchase of investments, when you compute the dollar difference, will be a $33,350 difference, and that is for the purchase of investments, and that'll be an outflow. So your net cash that is used by investing activities, because it's a negative number, is $146,625. Our last section is our cash flows from the financing activities, and we want to get the net cash that is used or provided by the financing activities. And the things that we are aware of is there has been a bond payable that has matured and paid off at the cash value, at face value for cash. So the bond payable decreased. So I'm going to take the dollar amount of the decrease and reduce our cash flows for the redemption of the bond. And that will be $41,400. We also notice that there is a cash dividend that was declared. So that is also going to be a payment of cash dividends, negative. And we also look back at our balance sheet and notice that our common stock increased. So there was an issuance of common stock, also referred to as a sale of common stock. So that will be an inflow. So the net change is going to be $19,584. Then you want to look at your net increase in cash by adding up your total net cash provided by operating, investing, and financing activities. So that will add up to $37,260. Then you will add your cash at the beginning of the period, which will be from the balance sheet, $55,660. And at the end of this, you're going to be adding up these two numbers to get your cash at the end of the period. So $92,920. And if you've done this correctly, this $92,920, this should match up with your cash at the end of the accounting period, $92,920. And that means that you've accounted for all of the changes in the balance sheet and the income statement and used additional information to reconcile the sources and the uses of cash during the period. Thank you for watching this video.